Hello everyone, this is Gary Meir, your instructor. This video will discuss your next chapter in cost, which is chapter 4. It begins on page 149 of our textbook, and it has a company profile, Washburn Guitars, which is a company that obviously makes guitars from scratch, handmade, based on the performer's specifications. So I always like to read those. It kind of gives you a real life example of how this job order cost system is used for this company. Also for chapter 4, remember this is our first TSA problem, problem 455. Our goal here is to hit the completion of 77%. So just make sure you're aware of that. It's important or very critical that if you have problems with this particular question, that you ask me as soon as you get to it. I can help you with those questions. I can help you make sure that you understand the problem to hit that completion. Remember, if we don't, that makes life a lot harder. That means that we have to somehow figure out what we're going to do, because if you don't hit that percentage and you didn't do anything, you would be subject to not passing the course, basically with a D or less. So even if you had other assignments completed appropriately, this one has to be done. Otherwise, you will get a D or F grade for the course. Also be aware that this chapter has an Appendix A to it or attached to it, which are the journal entries. We don't do many journal entries in cost. This is probably our heaviest one with journal entries. And again, the test is open book. Your examples are open book. I'm hoping and I'm assured that you will do fine with those entries. They're not complex, simple debit credit entries. But again, if you have some questions on them, please let me know. Also found in this chapter is the overhead application. This is the first time that we've done this, so that's new also in chapter 4. And basically remember, overhead is our manufacturing overhead, and it's those indirect costs, right, that are attached to our cost object, our product costs. And we can't easily identify those in our cost object. So our only job then is to somehow allocate or apply a certain dollar amount to each part or cost object. And that's the goal with this application process. So we'll talk about that once we get into some of our problems today. Also, remember that the due dates, try to watch your due dates, plan accordingly. This takes us right up to our spring break almost. There's a little bit of time there before, about a week before. But at least make those due dates aware. There is a different one, February 27th, which is already a week from today. The concept clips videos should be done by that point. So it's 5 points. I know it's not a lot of points, but try to get that completed before that due date. There is no late penalty on that. If you're late on those, you get a 0. So be careful with that. And March 11th for everything else. So going back to our problems then, the author or the chapter begins with a discussion between two types of costing systems, a job order costing versus a process costing. Process costing will be discussed in chapter 6, which is going to be our next chapter. But they do, in chapter 4, discuss the definition here, basically. So who uses job, who uses, or what type of company uses process costing? Well, it depends on the company. If you have companies that have unique, one-of-a-kind, like Washburn Guitars, then they're going to be more inclined to use a job order system, as opposed to those Procter & Gamble's, Johnson & Johnson, the very large, make one thing millions of times. they're going to be called a process or use a process costing accounting system. And I think the examples provided in the book are pretty clear. I don't think there's any doubt where with construction, that's a very unique process. Each customer has its own requirements, or even in printing. I know we might make a lot of them, but each customer has its own specifications. So take a look at those. Also look at who or may use the process costing system. Here are some examples of industries or companies that would use food canning, cement production, petroleum, so forth. Homogeneous means the same product. Again, lots of times. So that's who would use that process. And remember, whether we use job order, whether we use process order costing, the goal here is to come up with this cost per unit for our product. I also showed as a tip, basically, this is from another course or another class, where we've completed problem 36, just to get us into that mindset. This is on the test. You have to identify, based on the industry or company, would this person or company use job order, or would they use process order costing? So again, I tried to circle keywords: the discount, the custom, the not so custom type industries. So hopefully this will help you in that process of identifying. Now, overhead application was another part of this chapter, and specifically we call this normal costing. And remember, our goal here is to try to cost quickly, to cost consistently, right? Whether I make a part in January, because again, January has huge heat bills, as opposed to a part made in July, which doesn't have heat bills, there could be a huge swing in costing between the two periods. So that's where this normal costing comes into play. We're going to apply at a consistent one rate or two rates possibly, the overhead dollars. Now remember, with overhead and our product cost computation, we have three parts. We have direct materials, we have direct labor, and now with normal costing, we have this applied overhead in dollars. In chapter 2, chapter 3, we use actual costing, right? Whatever the overhead was, whatever the depreciation was, whatever the utility bill was, that's what we put into work in process. This is our work in process account. What goes into it? This is only product cost, work in process inventory. Is all that we can use here. So, under this normal costing, as opposed to actual, and there's a discussion on that, and why we're not using actual. Unless you're a very small company, most companies use normal costing. And the goal here, again, is to speed the process to avoid those uneven production levels or uneven cost amounts throughout the year. So how do we get this estimated rate amount? Well, it's a computation. It's really step number one. It's called a predetermined overhead rate. So step one helps us to come up with this predetermined rate, which is we, at the beginning of the year, before the year even starts, have to develop an estimate amount of all overhead. So these are the dollars on top. Not only do we have to estimate the overhead dollars for the entire year, we also have to estimate, well, how much production are we going to do in that year? What's the activity level? And this could be units, this could be machine hours, this could be labor hours. It's whatever the company feels is a good driver. Remember, a cost driver is what drives our cost amounts. Operations drive our cost numbers. It could even be a percentage of labor as our driver. So 70% of our labor cost is going to be our overhead rate. It could be that simple. So watch for that. It's the only way. We'll do some problems where we'll show this application. Now the application here is step 2. So what we do is step 1 is come up with this rate at the beginning of the year, before the year even starts. It's a lot of effort to come up with this rate. Because again, we're dealing with so many different accounts throughout the operation, all those indirect costs that are associated with overhead. Step 2 then is to apply it to our job, and we're going to be using job order costing right in chapter 4. But remember, we're going to use this application of overhead in process costing and standard costing. They're all similar in nature. So once we get out of the small mom and pop operations, this is what is done for many companies to assign their overhead. And now remember that in step 3, what happens here is we have to reconcile at the end of the year. And we're going to take a look at our total actual and compare it to our applied overhead. The difference is reconciled at the end of the year. Remember what we're doing to our income statement. As we add jobs in our WIP, this overhead rate, remember, is an estimate. It's not real, right? It's not a real number. It's an estimated number throughout the year. Well, I can't give an IRS an estimate number for WIP or an estimate number for finished goods or an estimate number for cost of goods sold. It has to be the actual number. It can't be a fake number. So that's where this reconciliation is done. We're going to close out the over or under amount into, in most cases, cost of goods sold to adjust it back to actual amounts. So that is the discussion on, or the part 3 here in this case. So let's try a couple of these. The book does a nice job of showing these 3 steps and how we apply this overhead. So exercise 1 comes up with the rate, 50% of direct labor cost, right? And then our direct labor cost was $56,000 for this period, means that $28,000 of applied overhead was put into WIP, basically, as part of our production process. So that's how it kind of works. Well, it does work. It's not kind of, it does work that way. And then example 4 or 2 here is how do we reconcile the difference, which is step 3. We simply take the difference between what we applied throughout the year compared to the actual. In this case, we were under applied. If you look at the amount, here's our actual number, which is $400 more than the applied. A under applied is added to our cost of goods sold. If it's over applied, that means I put too much in. If it's over applied, I would be subtracting the over applied amount from our cost of goods sold. This is that step 3 reconciliation process. So I picked exercise 39 as my example. This is the completed exercise. And if I turn to page 198 of our book, question number 1 is calculate the predetermined rate. And they gave us estimated numbers for both overhead and labor hours. The labor hours is the activity level for this company. So that's what they're choosing as their driver of our overhead costs. That's a good metric to determine how much our overhead cost will be. So they came up at the beginning of the year with this estimate of 728 for their applied predetermined overhead rate. At that point, we're going to apply it to our jobs, right? So we then have to apply using actual hours. And this is what gets sometimes students confused. I'm using estimates one time, now I'm going to use actual another time. Yes, in step one, you use estimated hours, usually for a year, right? And step two, you use actual hours times the predetermined rate. So be careful with that. Also to the right, you'll notice that I have the actual journal entry that shows the application of overhead. So I'm applying overhead here to a particular job that we're working on. In this job, we spent 6,950 hours on it, and this $50,596 is the journal entry then to record this overhead amount. Again, the appendix for Chapter 4 will help you with these journal entries. After that, in Step 3, it says calculate the over or under applied overhead amount. In this case, if we see here, they said my actual overhead was this, 613,320, which comes from the problem. And to get the applied amount, remember, that is coming from the actual hours that were given, 84,100. I'm using our predetermined rate. And remember, I'm crediting that account, this manufacturing overhead account, which is a temporary account. So the journal entry is, basically, I'm debiting the WIP. For the applied dollars, I'm crediting manufacturing overhead for that same amount. On the left is the debit side, and I have those things or possibilities here. I'm debiting manufacturing control for the actual bills for utilities, the actual depreciation for the period, the actual salaries that were paid, right, during that period. So that's on the left side. So you add up all the left side, you add up all the right side, you compare the two, and we have a difference of $1,072. And you'll notice my actual was greater than my applied amount, so that means I'm under applied by $1,072. At the end of the year, step 3, reconciling. I have to get rid of this temporary account called control, because you don't see manufacturing control on an income statement or a balance sheet. So we got to get rid of it. It's kind of like that income summary that we learned about in accounting 1 and 2. So we close it to which account? Well, if I got a $1,072 debit balance, how do I get rid of it? I put a credit entry in to get rid of it, and that's shown here. I'm crediting the manufacturing control, and what am I debiting? Cost of goods sold. Now, if I had an over-applied amount, which means my over-applied credit side would be larger than my debit, to get rid of that, I'd have to debit that account, manufacturing control, and credit cost of goods sold. So it just works the opposite. So if I look at my cost of goods sold question, I had an unadjusted prior to closing the temporary account called manufacturing control. I had $927,000. But by debiting this account, $1,072, my adjusted cost of goods sold is $928.72. Remember, the unadjusted is not real. The 927 is not real. It's an estimate number because of the predetermined rate that I'm using. That's an estimate. So I got to convert my estimated cost of goods sold amount to actual cost of goods sold. through this entry process. Now, the book talks about one rate, which is a single overhead rate called a plant-wide rate, as opposed to, and they show that computation again, a departmental rate. So in question 40, in the book, page 198, they actually want us to come up with department rates. Many companies have multiple rates, more than just one. The reason being, some parts of our operation work differently, right? In this case, the assembly is using labor hours, which would make sense, right? They're putting things together as their driver. And in the testing, they use machinery to do their testing. So that would be more appropriate then in that department to use machine hours. We want to try to be as accurate in this application process as we possibly can. We don't want a huge over or under applied amount at year end. So look at question 40. It just shows that predetermined step 1 computation, the application of the overhead step 2, and then finally the reconciliation in step 3. These are the answers. I tell you whether it's over applied or under applied, right here. I'm saying yeah here because it's always better to be a little bit over applied than under applied. We don't want a huge adjustment to our cost of goods sold. And over here, I'm looking at an under applied amount. With that, I also show the applied entry to work in process and to our overhead control. Now, I know on the last problem, I called it manufacturing overhead control. The author or the textbook will just say overhead control. So be aware of that name change a little bit. And then also closing the overhead for the other. Again, these are small, immaterial amounts. If it is a large amount, and I think I mentioned it, there is a small discussion on it. Oh, in chapter 4, there's a appendix B that we are not responsible for. You will not have to do appendix B. I'm just looking. On page 170, they talk about if the amount is large enough, it will be allocated across not only our cost of goods sold, but also across our WIP accounts, our finished goods accounts. It goes across multiple accounts, not just cost of goods sold. I'm just looking. Sorry guys, it took me a while. I finally found where, remember, for immaterial or small amounts of this over or under applied, it goes to cost of goods sold. But please also know on page 157 is where I was trying to find the information. Page 157, if the variance or difference is material, large, right? If the dollar amount of this over or under applied is large, then we have to allocate that across our inventories with finished goods and cost of goods sold. All three get some portion of that over or under applied amount. And think about it. Remember, that applied amount is going in at the time we create our WIP account. So we have to adjust all those accounts then for actual overhead costs. So be watching for that on the exam also. There's some question on that as well. The difference between whether the amount of the variance is small in material, we go against cost of goods sold only. But if that variance is large, we have to go across 3 accounts: work in process, finished goods, and cost of goods sold. And these are just some practice entries I did with my day class showing, well, what is the entry for actual overhead? How does my actual overhead get recorded? And it goes into our control account with the corresponding credits going as normal. 57 is another problem I just put in our overview. This is on obviously your points as well, or your homework assignment. But I wanted to just show you the steps again. Coming up with our predetermined rate, right? In this case, there's just one. And how we assign or apply that overhead. In this case, the rate was 54. 54 times the actual machine hours, which is 200 for both job 1 and 2, comes up with the applied amount 10,800. I also put here the journal entry, right, to record that application. In part 2 of this problem 57, we are using departmental rates instead of 1 rate. We've got 3 now because welding, assembly, and finishing use different drivers. 1 is machine hour, or 2 are machine hour, 1 is labor hours. And then how does that application work? Well, now I got to have 2 lines, 1 for each, or 3 lines, 1 for each department. And then our goal is, hopefully, by using more than just 1 driver, 1 predetermined rate, we're using 3, we get a more accurate cost allocation. And that's what I write here. The goal with more than 1 rate is to come up with a better application, more accurate application of overhead. So that's the goal anyway. So I just have some more journal entries here, recording the WIP or the overhead application for both the overhead and the material and the labor cost. So just kind of giving an overview of all 3 product costs, right? Shown here as a journal entry. Remember, with our job order cost system, with all cost systems, the job is to get a unit cost. How is that determined? It's simply taking the dollars over units, right? So our 3 product costs: material, labor. So again, I'm going to just write this out. Direct material dollars, direct labor dollars, plus now with normal costing, our applied overhead dollars. It's the sum of those 3 that come up with our total product cost. So just be aware of the tracking paperwork, I guess you could call it, job order cost sheet. What's on it? It's simply our costs, units, stuff, and unit cost. Maybe an actual amount compared to a budget number. The material requisition form informs what job the material is going to. In this case, it's going to job number 12. Oh, excuse me, job number briefcase. So the material requisition form actually tells everyone what job it goes to, and then that makes the entry into work in process for that job. And then the time ticket will record the labor for that particular job, and that's the source document for that entry again into work in process. There's a nice summary here, the flow of the costs from material purchases, and then using our material, labor, and overhead into WIP. Once the job is completed, it goes into finished goods, right? This overview of the flow is on page 164 of your textbook. So it gives a nice summary of how our job order cost system works. When the item that we produced is sold, it comes out of finished goods, right? And then goes on our income statement as cost of goods sold. I did want to show one more problem. This will wrap up the discussion on chapter 4. It's exercise 43 on page 199. And I wanted to show how these job costs or job order cost sheets are laid out. You notice I have 4 jobs here, 93, 94, 95, and 96. And we're asked to come up with a total cost, right? What students sometimes forget is, remember, we normally don't complete a job all in 1 month, right? So there might be some costs that occur in a prior month. So that's where those beginning balances need to be added to our material and labor and applied overhead for the current period. And that then will become our total cost. Also be aware that in this particular case, we had to come up with the labor hours. That's the 120, the 300, the 145. The author felt that we had to do that computation. So that is then used times the $8, which is our predetermined rate, to get us the applied amount for overhead. Don't forget, when we ask on the test for a total product cost, don't forget to include the applied overhead. Also realize what work in process means. What work in process means is that it's those jobs that we did not complete, right? So in this particular case, I have 3 that weren't done. 94, 95, 96 were not done. So that's what's in my WIP inventory at the end of the month, in this case, the month of August. If we go to our next inventory count, which is finished goods, we actually completed 1 job. We didn't have any to start with, but we did finish job 93, but we sold it in the same period, and therefore we have a 0 balance in finished goods. Remember, when we have our total completed cost, that's when we can come up with a cost per unit, right? So only when the job is completed can we do this computation. We can't do it before, we can't do it while it's in WIP, because we're not finished with it yet. Only when it's done can we come up with this cost per unit. And it shows how we come up with our cost of goods sold, which is what? The actual cost we took out of finished goods. So just kind of, this is that flow again from WIP to finished goods to cost of goods sold that we want to make sure we understand for chapter 4. Also, you'll be asked to mark up our cost, right, for a selling price, a sales price. In this case, I marked it up 40%, which means 40% is added to our cost. I take 40% of our cost, which is $5,128. I add my cost to come up with $17,948. A quicker way, right, is to simply multiply our cost by 1.4. So 1 is the original cost, right? And the 0.4 is the markup. So if I take 12,820 times 1.4, I get the actual sales price of 17,948. It avoids that 2-step process to get that to that number. So watch for those questions where you have to compute the sales price of this particular job in this case. if we were to look at the journal entry, I don't have that here. For the sales price, we would be what? Debiting the accounts receivable for 17,948. I would be crediting some revenue or sale account, obviously, for the same amount. And at the same time here, right, I would be debiting my cost of goods sold. Crediting finished goods inventory. For the 12,000, I gotta look again, back up. 12,820. To complete the sale transaction. Remember from accounting 1, every sales transaction has two parts, the revenue part and the cost part. Obviously, the difference between the sale amount and the cost amount is our gross margin, right? So that's what appears on our income statement, that computation itself. Okay, that ends our discussion for Chapter 4. Again, keep me in the loop. Let me know if you have any questions, and if I can help you, I certainly will. We can collaborate if you want to speak one-on-one through our computer, if you have, or you want to speak to me directly. So keep that in mind as well. Thank you for your time and have a great day, guys.